You can write the plan before the trade starts, know exactly what you should wait for, and still feel your hand moving closer to the mouse the moment pressure appears. That is the uncomfortable part of trading. The problem is not always that the trader has no plan. Very often, he has the plan, he understands the rule, and he knows which decision would protect him from making the situation worse. But the market does not test the plan only when the trader feels calm. It tests the plan when price starts moving, when the candle gets close to the level, when the move begins without him, or when the trade starts turning against him. That is when the emotional need to act can become louder than the rule that was written before the pressure arrived. Self-sabotage does not begin when the trader knows nothing. It often begins when he knows exactly what he should do. But one emotional moment makes the opposite action feel reasonable. A trader can feel very disciplined while nothing is happening. He can look at the chart calmly, write the plan clearly, and believe he knows exactly what he will do if the market confirms or rejects the idea. But the calm version of the trader is not always the same version that appears once pressure enters the decision. When the market moves fast, waiting begins to feel passive, the rule begins to feel too strict, and doing something begins to feel smarter than doing nothing. This is why pressure is such a powerful test. It does not only change how the chart looks, it changes how the trader interprets the chart. The same setup that looked weak before can suddenly look acceptable. The same rule that felt obvious before can suddenly feel negotiable. The trader does not usually say, "I am breaking my plan now." He says, "This situation is different." And sometimes it is different, but many times the real change is not in the market. It is inside the trader. A trading plan is not really tested when it is written. It is tested when the market gives the trader a reason to negotiate with it. Self-sabotage rarely starts as one big obvious mistake. Most of the time, it begins with one small exception that feels harmless. The trader enters a little early because the move looks strong. He gives the stop a little more room because price is close. He takes one more trade because the previous one almost worked. He tells himself it is only a small adjustment, not a real rule break. And because it sounds reasonable in the moment, he does not see the danger. But this is how many trading plans are slowly destroyed. Not through one dramatic decision, but through small permissions that teach the mind the rule can be negotiated. The first exception matters because it opens the door. After that, the next exception feels easier. The trader has already proved to himself that the plan is flexible when emotion becomes strong enough. A patient trader learns to notice this moment early. He does not only ask, "Is this a good trade?" He asks, "Am I trying to follow the plan, or am I trying to get permission to ignore it?" That question can feel uncomfortable, but it often reveals the truth before the damage becomes bigger. If the trade needs too much convincing, that is already information. If the setup needs a story to make it look valid, the trader should pause. The first exception is often where the whole pattern begins, because self-sabotage does not usually start as rebellion. It starts as permission. There is a point where the trader still believes he is following the plan, but in reality, the plan has already been replaced by reaction. He's no longer asking whether the setup matches his rules. He is asking how he can avoid feeling wrong. He is no longer waiting for confirmation. He is looking for any reason to stay involved. The language in his mind changes, but the change can be subtle. It does not always sound emotional. Sometimes it sounds like analysis. He may tell himself that the level is still valid, that the market is only testing liquidity, that the stop should be wider because the structure needs more room. And sometimes those ideas may be true, but the deeper question is whether they existed before the pressure appeared. If the trader only discovers a new reason after the trade starts hurting, that reason deserves suspicion. This is why many traders say the plan failed, when the more uncomfortable truth is that they left the plan. They left it when they entered too early. They left it when they moved the stop. They left it when they chased the move after missing the clean entry. They left it when one rejected idea became 5 emotional decisions. The market created the pressure, but the reaction came from the trader. That does not mean the trader should attack himself. It means he should observe himself more honestly, because the moment reaction replaces process is the moment where the trader can still choose to stop. If he can see that moment clearly, the mistake does not have to become the rest of the session. One broken rule rarely stays isolated if the trader does not stop and reset. After the first emotional decision, The mind often tries to repair the discomfort created by that decision. The trader enters too early, then price moves against him. Now he feels pressure. To reduce the pain, he adjusts the stop. After adjusting the stop, he becomes more attached to the trade. If the trade loses, he wants the next trade quickly. Not because the next setup is clear, but because he wants to change how he feels. This is how self-sabotage becomes expensive. The first mistake may be small, but the emotional decisions after it can build a whole spiral. One click becomes another click. One defended idea becomes another forced setup. One loss becomes a story the trader is trying to fix with action. At that point, he is no longer trading the market. He is trading his own discomfort. The dangerous part is that every step can feel logical while it is happening. Moving the stop feels like giving the trade room. Taking the next trade feels like staying active. Chasing the move feels like not missing the opportunity. But underneath those explanations, the trader is often trying to escape one feeling, the feeling that the plan was not followed and the situation is now out of control. A patient trader understands that after a broken rule, the next decision is the most important one. Not because it will recover the loss, but because it will decide whether the mistake stays small or turns into a trading session. The trader regrets. The first mistake hurts, but the second one often comes from trying not to feel it. The real skill is not avoiding every mistake. No trader does that. The real skill is learning how to stop one mistake from becoming a sequence. This is where the patient trader starts to separate himself from the emotional trader. He does not pretend pressure is gone. He does not pretend he is always calm. He simply creates a small space between the impulse and the next action. That space can be very simple. He takes his hand away from the mouse. He writes one sentence in the journal. He closes the chart for a few minutes. He asks, "Am I following the plan, or am I trying to fix how I feel?" This question is powerful because it brings the trader back to the real problem. Many bad trades do not begin with a bad setup. They begin with a trader trying to repair an emotional state through action. A trading plan is not only there to guide entries and exits, it is there to protect the trader from becoming someone different under pressure. It reminds him what he decided before fear, greed, frustration, or urgency entered the room. And when the trader respects that plan, he is not proving that he is perfect. He is proving that one emotional moment does not have to control the next decision. Most traders do not need a more complicated plan before they can improve. They need a stronger relationship with the plan they already have. Because the market will always create pressure. There will always be a candle that moves fast, a missed entry that feels painful, or a losing trade that feels personal. The question is not whether those moments appear. They will appear. The question is whether the trader lets those moments rewrite his behavior. A patient trader does not use the plan to prove that he is right. He uses the plan to protect the next decision when emotion wants to take control. In the end, the market may challenge your plan, but self-sabotage is what breaks it. If you like this video, please like, comment, or subscribe to The Patient Trader.